So I made a new buy as of yesterday, and it was Hims stock. It's an incredibly fast growing revenue, 70% year over year. That is crazy. Literally in 5 days, the stock has dropped 40%. So why did shares drop? So I currently have about 3,000 in Hims. I just wanted to get into why I thought this was a good buy. Also explain to you why it sold off so heavily. You are looking at a drop of almost 40% between the 21st and the 26th. So literally in 5 days at $41, I'll explain to you why I think this is actually a bargain. So what is Hims & Hers? Essentially, Hims & Hers are a telehealth company. Hims & Hers Health operates a multi-specialty telehealth platform that connects consumers to licensed healthcare professionals. The company offers a range of health and wellness products and services available to purchase on its website. What they've done is they've really cornered the market for embarrassing or things that you wouldn't want to go to the doctor for. Yeah, just notice how simple the website is. It really guides you through the process of what you're trying to achieve. And they've identified things that you might not want to talk about other people to. So for example, your anxiety, you might not want to talk to others about your anxiety. What they've done is they've really effectively created a tech company within the health industry, which is kind of hasn't been tapped into yet. If we look at Hims & Hers fundamentals, we notice just how quickly the revenue is growing. Year over year has grown 70% year over year. That is crazy. Over 2 years, essentially the same, almost 70% again. So this is an incredibly fast growing revenue. Their cash flow is absolutely exploding, going from 26.87 million in 2023 to 198.33 million. If you have a look at the stock-based compensation, which is essentially the money that they pay out to their workers in stock, it hasn't moved much, and the free cash flow growth is quickly outpacing the stock-based compensation. This is such a fast and smooth runway up. And yes, it's true that Hims & Hers is quite a young new company and quite unpredictable. And this is definitely my riskiest investment that I've made in a while, just because of how young the company is. Most of my companies in my portfolio, I'm quite risk averse. So most of them are true monopolies in their field. So monopolies or duopolies in their field. So S&P Global, MasterCard, Amazon. Hims & Hers obviously isn't, but in my opinion, it's the first mover on the telehealth industry, and it's growing so large. And I think that its moat will come in time as it grows. But a healthy amount of cash as well, 300 million and only 9.46 million in debt. So really strong on the cash side of things. Obviously, its net income has exploded from negative to 126 million. So why do I think that this is undervalued at the minute? Well, if we have a look at the free cash flow yield, which is essentially the free cash flow per share divided by the price, we get a free cash flow yield of about 2.17%. So I would usually call a company with around a 3% free cash flow yield a fairly valued company. So why am I saying that Hims & Hers Health is fairly valued at 2.17%? Well, it's growing so quickly that I think it can generate, so at the minute it's got a market cap of 9.3 billion. We have a look at their free cash flow quickly. Maybe not so quickly, I don't know why I keep messing this up. We have a look at their free cash flow. The free cash flow that they're generating at the minute is about 200 million, hence the 2%, because their market cap, the free cash flow divided by their market cap gives you the percent yield. Their market cap around 10 billion, the free cash flow about 200 million. So you get that 2%. They've grown their free cash flow from 48.92 million up to 198.33 million, which means they've grown it about 150 million. So if we consider they've done that in 1 year, I reckon 1 year from now, they could definitely at least increase their free cash flow by 100 million, putting their free cash flow to about 300 million, which would mean that if we're looking a year forward, we're looking at a 3% free cash flow yield. And I see that as fairly valued, especially for a company that is growing revenue at 69% per year. I mean, this is an insanely quick growth, and it's not for how fast it's growing, it's not valued correctly. Now you might look at me and you say, well, the PE ratio is sitting at 74, but to me, it's not about that. To me, it's not purely about the PE ratio. When you're valuing a company, you really need to take into account how much free cash flow they have, which allows them to return, eventually allows them to return money back to the shareholder in the form of buybacks or dividends. Just wanted to include this. So from a tech disruption standpoint, the $4 trillion US healthcare market remains largely untapped, and Hims & Hers is well positioned to fulfill its goal of becoming the most trusted health and wellness brand in the US. So why did shares drop after earnings about 19 to 20% in one day? Essentially, shares of the company dropped after hours as skittish investors are concerned about shifts in the GLP-1 market. The GLP-1 market is a weight loss drug that is very effective and has a large demand. You might know it as Wegovy or Ozempic. The company's stock has fallen 41% since closing at $66 per share on Thursday, after the Food and Drug Administration on Friday announced that semaglutide, the active ingredient in weight loss drugs Ozempic and Wegovy, is no longer in short supply. So essentially, the government had given Hims & Hers the ability to sell a compounded version of the drugs, of the semaglutide GL1 drug, GLP-1. And because that's no longer in short supply, they are no longer allowed to sell it. So the stock actually plummeted 25% on the Friday following the FDA announcement, but the company's still up 56% year to date. So why am I not worried about this? Why is this not a major concern to me? So for GLP-1, the analysts estimate that Hims & Hers GLP-1 portfolio operates with a gross margin around 50%, which is lower than the company's average, which was historically 82%, and that was taken from December 2023, so before they started offering the GLP-1 product. So as they begin to phase out the GLP-1s, they will actually increase their margin, which is a good thing for investors. I just wanted to touch on their outlook. So Hims & Hers gave a very sunny outlook, and it expects revenue to hit 2.3 billion, 2.4 billion, which is roughly a 59% growth on the low end of the range. The company also projected adjusted EBITDA of 270 million to 320 million. So Hims & Hers expects its weight loss business to bring 725 million in revenue in 2025, but that figure excludes commercially available dosages of semaglutide, which the company will no longer offer after the first quarter. So they've given us a figure they reckon they could pull in 725 million without offering the GLP-1, which is semaglutide. So essentially, they believe that growth is still going to be strong without the GLP-1. So the company is going to pivot and it's going to move towards its other weight loss products. It plans to sell a generic version of Novo Nordisk's diabetes drug, liraglutide. But it also will sell personalized doses of semaglutide only for these consumers of whom it is clinically necessary. So not all sales of GLP-1 from Hims & Hers will end. So as you can probably tell, it's been a day since I started recording and it's up 4%. Well, no, actually 5.5% today. So I believe that the market is waking up a little bit to the fact that it may actually be undervalued. I'm glad that I entered my position when I did. I know this video was different to the most recent video I've made, but I'm still getting to grips with YouTube. This is what I enjoy doing. There will be other videos like the last video I made. I do, however, want to give you updates on what my portfolio is doing and what I think is a good deal to